Hey, welcome to our Market of the Moment update, week of January 17th, 2022. Michael Oldham and Chris Madrid on the case today. Welcome, Chris.
Hey, man.
Hey, got your
A little
guaranteed
chilly,
rate.
a little chilly out here in DFW today.
Little chilly. Of course, it'll be 80 degrees tomorrow.
Oh, yeah.
That's what we got to look forward to. So anyhow, we're going to jump in here real quick. Get going today. Missed last week. I was in beautiful Jamaica. Very little service on the wireless end, which was perfect. But came home to a lot of business to take care of, which is also perfect. So
Good, yeah.
all right. Well, I know Chris has got stuff to share with us today on rates.
Yeah.
Always, hit us.
Like we've been saying for, I don't know, the better part of the last year, rates are going to be headed up. And hey, to be honest, this came, and it came a lot quicker than I thought it was going to. We were expecting, or at least I was expecting, right? February, March would start to see a spike in rates. And then literally like this past week, while you were on vacation, rates jumped like 0.5% overnight, right? So we literally went from 3 to 3.5 in like 2 days. They settled down. We kind of came back down to the 3.3 range, which is essentially where we're sitting now. So we're sitting 3.3, still up to about 3.6. So it really depends. And I would imagine, we're going to continue to see this trend, throughout the rest of the year. And I would not be surprised if we push over 4, by third or fourth quarter. So that's the expectation. Again, historically though, rates are still really low, really low at 3.5%, at 4.5%, whatever it is. It's still well below what the 50-year average is, which is like 8.5%, mortgage rates over the last 50 years. So still a great time to buy. The one of the articles that I was reading that I think I put out this past week was data from Adam reports owning a medium priced home is more affordable than the average rent on a 3-bedroom property in 58% of the United States. So purchasing a home is still a great way to build wealth, build equity, and then ultimately invest in your future, not someone else's. But yeah, that's the biggest thing is rates on your primary residences are moving up. We also, I think we touched on a couple of weeks ago that the FHFA, who essentially oversees, this is a government agency that oversees Fannie and Freddie, had indicated that they are going to be pulling back essentially on how much they lend on second homes, right? So traditionally, like we had talked about before, second home rates were very similar to what primary residences were. So if you were purchasing a second home, you were almost getting an identical rate as you would on a primary residence. The big difference was down payment. So at the time, you had to put at least a minimum of 10% down, where on a primary residence you can do as little as 3.5% to 5%, depending on whether you're going FHA or conventional. So now they have essentially increased what they call the upfront cost, which is ultimately the rate that you're going to be getting on these type of loans. So right now, if we're seeing rates on a primary residence at, let's just say 3.5%, on a second home, right after the window's closing, like we had chatted before, if you don't get closed by middle to end of February, would be my guess, your rates going forward on a second home are going to be about 4.75. Is what I'm seeing right now on investment property. So they're going to be more in line with like a rental property or investment property than they would be on a primary residence. So there's you got about a week to find your second homes, get under contract, and get closed. Because the rates on those jokers are moving up at least a full percent. Again, plus a full percent plus in the next month and a half.
Okay. Good info to have, definitely.
Yes.
So if you're looking for that second home, we've got a week to go get it. I'll give you my number here in a little bit.
Hey, again, at the end of the day, it's not going to prevent you from being able to buy one down the road. It's just going to cost a little bit more, right? And again, 4.5, 4.75, 5%, it's still a great interest rate. So and that's it's not, it's not all bad. It's just gonna cost a little bit more. So
Yeah, I mean, if you look at it, if you locked in at the right price on your primary residence, when you add your second, you're probably still lower than the 50-year average on both of them put together. So
yeah.
anyway, all right, good info to have. I did have one real quick question I wanted you to touch on. I did have a client ask what the new limits on, I guess, the conventional loans. Does that mean anything for first-time home buyers?
Yeah, so a first-time home buyer now can purchase more home with less money down, right? So before, so man, back when I got into to banking and lending, 20 years ago, the number that always stuck in my head was like 417,000. So the most that you could finance on a conventional loan back in the day, right? So this would have been like early 2000s, was 417,000 with 5% down, right? So if we do some quick math, that would mean you could purchase, at that time, again, this was 20 years ago, you could purchase a $440,000 home with as little as 5% down as a first-time home buyer. Now, right, so for 2022, the new limit has gone up to 647,200. So you could as a first-time home buyer, you could purchase up to about a $668,000 home with as little as 3% down. So as a first-time home buyer, you get to do 3% down versus the traditional 5% of a primary residence. So it's a little less money down, a little less, less money out of pocket. So that's, obviously that's a great option, specifically for first-time home buyers in that upper, 5 and 6 range, versus not being able to purchase or having to put a lot more money down on conventional. So also on FHA limit went up to 411,700. So you can, potentially on FHA purchase a $427,000 home with as little as 3.5% down.
Okay.
So again, with obviously home prices going up, it does help. As I was referring to, when you're 20 years ago, when your max loan amount was 417, anything over that 417 was considered jumbo, which you automatically have to do. In most cases, it's 20% down. There are some options with excellent credit and whatnot to do less, but in most cases, it's 20% down, and you have to have like 6 months reserves after closing on a jumbo, right? So that's what a lot of people try to get away from, is having to do 20% down and then having to have, show all this, this cash and stuff after closing.
Yeah.
So,
okay.
Yeah.
All right. Well, let's move on to our real estate trends. We're going to just pretty much today cover the 2020 versus 2021 numbers in our area. So home value increases, been a big topic on everybody's mind, I guess. Everybody wants to know, first, are these home value increases for real? Secondly, are they going to last? Third, is it going to be a housing crash because of it? So I've selected some, certain cities in Collin, Denton, and Dallas. I actually don't have Tarrant County numbers, so wasn't able to pull those. But as you can see here, some of our bigger cities, McKinney, I don't have on here, but it's trending very much the same way as these other 5 I did include. But Salina in 2020, the average price was $382,250. In 2021, the average price was $500,000. So quite a jump. Prosper 520 in 2020, jumps to 650 in 2021. Frisco, the average price was $431. It is up to $545, a very huge jump. Plano, 365 jumped up to 433,750, and in Allen from 357 up to 431. So some 6-figure jumps here in some cities. Definitely Salina, Prosper, Frisco, all 3 of these cities still seeing very active market.
Oh my gosh. Yeah, it's like 20. I mean, again, we've been talking about the double digits in Plano specifically, right? That's like a 20% increase, 21% increase, whatever that is.
Yeah.
So yeah, that shouldn't be the case this year, right? I think we're going back to more normalized increases, especially with rates, moving up.
Yeah.
So that's good. But I think there's still too many people moving to Texas, right? So in our housing shortage, we're still behind on new construction. New construction isn't anywhere near where it should be to help with the demand, right? The amount of people that are moving into the state. So yeah, I definitely don't see double digits this year, but I mean, prices aren't going down, right? Which is what I keep hearing, like people, hey, I need to find a deal. Dude, you're not going to find one. Like that was 10 years ago.
Deals. We're telling buyers, sellers, we expect them to maybe level out, but I think in certain pockets, I think in Salina, Prosper, Frisco, I think in these pockets, I think we might still see double-digit increases this year, just due to the fact there's just no inventory. And builders, we just got buyers under contract on Monday on new construction, and this home is studs. It's got all the studs up, no roof and no sheetrock yet. Windows are in it, but they're still saying 6 to 8 months on on a home that's looks to me like it could be done in 3 months. But so anyway, Denton County saw not quite the raises as we did in Collin, but it's all relative, right?
Yeah.
So Flower Mound saw these biggest jumps here from 440 in 2020 up to 515 in 2021. Louisville was at 305 in 2020 up to 345 in 2021. The Colony from 310 up to 360. Little Elm takes a big jump right there on the outskirts of Prosper, Salina, Frisco. So it's the next stop once you get pushed out of those areas. So those values have jumped from 297 to 373.5. And Denton County also seeing good little jump from 270 to 324. And Dallas County, North Dallas, Dallas is broke up into many different regions. So I've mainly focused on the North Dallas area, jumped from 460 in 2020 up to 540. The Garland Rowlett area, 227 up to 267. Rowlett, the average price a little higher in both of those areas. I think it went from more like a 260 something up to a 323 maybe. Coppell saw 440 jump up to 509.5. Highland Park, this stood out to me. These a lot of people think when you get into the higher price points, you don't have as much competition. But I've been telling people we're also seeing a lot of competition in the $1 and $2 million category. And you can see here in Highland Park in 2020, you could have bought an average at 1.87. But in 2021, it's going to cost you over 2 million, 2.35 in the Highland Park area for an average price home. And Richardson goes from 330 up to 387. So I really think the message here is, all the Dallas Fort Worth areas saw price increases. I don't want to say price increases as much as the value of your property went up. Period. So, and then the next question is, are they going to continue to go up? And as we've talked before, most likely not at the pace they have. In some of these pockets, Highland Park, Salina, Prosper, Frisco, some of these northern areas, I do think we're likely to see low double digits even this year, just due to the fact that even though rates are ticking up, traffic is still ticked up very high. So, and that's what's driving the market is just sheer demand versus supply.
Yeah, applications are up. People are applying. So that hasn't slowed, and it's probably ticked up a lot more on the lower credit levels, right? Obviously, everyone hears that rates are going up, so then they want to explore the options. So we're starting to see a lot more, below credit, worthy applicants. But again, it's just part of the deal with everyone trying to get into something before prices get too crazy.
We've had several buyers speed up their process due to rates. It is a good financial decision if that's where you're at and you're that close. Anything else to add before we jump off here?
No, man. No, again, at the end of the day, whether it's a decision to kind of stay where you're at, right? If the situation that you're in, requires you to stay where you're at, then just be content with that decision. Or if it's somewhere you want to explore options and maybe look at moving a little bit further out. We talk about, if you're in and around the Collin County area, Sherman, Denison, there's still some really good opportunities out there. And it's, what is that, a 40-minute drive from George, 121? What am I thinking? 121?
Yeah, from 121, it's probably about 45.
Yeah. And again, there's, if it comes down to, working remotely, I know there's, I can think of, I don't know, 10 companies right now that are hiring for remote working situations, right? So that's always an option. If you end up moving a little bit further out, have an opportunity where you can work remote or work from home, and then just start building something for you and your family, to be able to leave. So again, working with the guys that know how to position and put you in the right spot to be able to succeed for that. So.
Well, if you've got any questions on real estate side, reach out to Amy and I, 469-369-0873. If you're interested in refi or getting pre-approved for a mortgage, reach out to Chris, 214-734-1531.
Yes.
We will both do what we can to take great care of you all.
Absolutely. Hey, we have an exciting new program, or a couple programs that are going to be rolling out. So I think it's coming out this week. So maybe by next week's call, we'll have a little bit more information to help sellers be able to capitalize a little bit more and better on purchases without the pressure of selling the existing. So hopefully we can touch more on that next week, if not the following.
Cool. All right, man. Have a great day, and we'll talk to you soon.
Catch you on the flip side. Later.
All right, man.